Thanks for joining us today on The Close. I'm Morella Fernandez. Markets close in an hour. Here are the stories we're watching today in the BNN Bloomberg newsroom. Oil prices falling now that the U.S. and Iran have a tentative agreement in place. It extends the ceasefire with a plan to reopen the Strait of Hormuz this week. Now, it's expected to get signed Friday in Geneva. But there are still a lot of questions. Iran insists that a deal must include an end to the fighting in Lebanon, but Israel's defense minister says the country will not withdraw. Prime Minister Mark Carney's in France for the G7 summit. He says the war in Iran will be the main topic, adding he will have an opportunity to see what Canada and other countries can do to help reinforce progress on peace. The Prime Minister has been clear, a durable ceasefire must ensure safe transit through the Strait of Hormuz and address Iran's nuclear program. Shares in Payoneer are getting a boost today after news that Canadian fintech Nuvei agreed to buy it for $2.7 billion U.S. The company combined will create a single partner to accept, hold, and move money across nearly 200 countries. It's also expected to generate about $3 billion in annual revenue. We spoke with Nuvei CEO, who says the deal creates a unique infrastructure.
We've been focused on building infrastructure to enable every payment everywhere. And Nuvei has been extremely successful on the pay-in, helping our customers, connect with their customers to collect funds in currency in markets where they operate around the world. Payoneer allows our customers to have virtual bank accounts and be able to receive funds from multiple sources. Typically, where Payoneer operates are Amazon, Etsy, eBay, TikTok resellers. Well, they'll consolidate that, receive the funds, and then enable real-time cross-border payments.
A look at where we are in the markets right now. We have the World Texas July contract down almost $4 to 80.93, so down 4.6%. And the TSX moving up today. It's up 0.8% or 277 points to 35,215 right now. And then in the U.S., we have a 1.7% move up for the S&P 500. The Dow Jones gaining over 1%, 571 points. And the NASDAQ up almost 3% today, or 773 points. Global markets reacted sharply after the news emerged of that agreement with the U.S. and Iran. It sent oil and gold in different directions, but gold has now turned higher for the day. Let's go to Mike McGloney, senior commodity strategist at Bloomberg Intelligence. He joined us to talk some more about what's going on. Thanks for joining us today.
Thank you for having me, Marielle.
So oil sharply down, but I'm wondering if you think the volatility will carry on. We've seen these deals sort of happen and then be taken off the table, happen again, taken off the table. Is the volatility expected to continue?
Probably not, Marielle. I think the key thing on a scale of 1 to 10, the 10 for crude oil is what does Mr. Trump want or need as we head to the midterm elections in November. That's why I focus on that December contract in WTI. Right now, it's $74 a barrel. I fully expect it to head closer to 50, or the U.S. average cost of production around 55, then above 100. Now, he didn't get the surrender that he wanted, but he's doing a workaround to get prices lower in Iran. And the key theme that's happening is before this event, the excess of supply versus demand of crude and liquid fuels from the U.S. and Canada was approaching 7 million barrels a day. Now it's heading towards 8 million barrels a day. Unless prices go down to cut that off, it's going to 10 million barrels a day. It's a pretty significant bear market that had a good catalyst to go back down.
Okay. How significant is it when you're factoring in the price of oil that the U.S. Reserve is now at a 43-year low? What kind of pressure does that put on Washington to make sure that this deal happens?
Oh, I love that analogy. The U.S. SPR was started in 1974 by President Ford to cover 90 days of net imports. As I just mentioned earlier, with Canada, the U.S. and Canada have a surplus of 8 million barrels a day. They have to export, and if they can't or find issues, prices are going to go down. So SPR is no longer needed, particularly as a net importer. It's like needed as much as Saudi Arabia needs an SPR because we have a surplus of supply. So it's good for things like this and hurricanes, but that's how the world's changed, and that's why crude oil prices are going lower.
Let's talk about gold for a moment as well. It is down more than US 1,000 from the peak, which was January. Is it a good time to buy? Do you think it's had its run? What would you do here?
I think it's going to be stuck in a range for a number of decades, particularly because of the indications. First of all, it went up too much into February. It got to its most stretched versus its 60-month moving average in about 4 decades. Right now, it's still the most expensive gold versus a basket of U.S. Treasuries in about 4 decades. And typically, when it does that, it puts in a peak and goes down for a while. Now, we bottomed initially at $4,000 an ounce. But we're doing this. One thing we're doing right now is gold volatility spiked. So it's no longer a store of value that trades below the volatility of the S&P 500. Currently, the volatility on gold, 180-day volatility, is 2.3 times the S&P 500. As you can see, it needs the stock market to go up. That's what's changed in gold. So I fully expect it to, it could make a new high, but I expect it to trade in the range for maybe the next 20 years, like we did in the last 20 years in crude oil.
Wow. Okay, let's get to Bitcoin, which led risk assets higher. Do you think it'll stay?
Oh, no. I think the key thing to worry about Bitcoin is at the beginning of the year, it led the pump then dump syndrome. First it was Bitcoin and natural gas. Now it's gold, silver, platinum, palladium, iron ore, and corn. You see the connection there? More and more commodities are following that pump and dump indication of post-inflation deflation. The problem with Bitcoin is it's a leading indicator and has a surplus of supply of crypto. So if it continues lower, which I expect, the whole sector might come lower. The whole market, particularly the main thing that's bucking that trend so far is the stock market. But so far, there's nothing going to make that go down.
All right. I'm going to leave it there. Mike McClone is with Bloomberg Intelligence. He's the senior commodity strategist. Thank you, sir. Coming up next, oil prices, as we said, falling today after the U.S. and Iran reached that agreement. But will that agreement hold? Will the Strait of Hormuz reopen? We'll get into the details when we come back. Let's have a look at SpaceX day 2 of trading here. And you can see the share price is at $186.82. So it's up $25 just today or 16%. And in 2 days of trading, up 24%, 24.5% actually. Of course, the initial offering price was $135 American, but there was so much interest in this stock from retail investors and, of course, everyone else that it shot up in no time. And it made Donald Trump. It made Elon Musk the first trillionaire. He was already the world's richest man, but now he's also the world's first trillionaire. Many watching to see whether or not this company actually delivers in the long term and if the price will come down, because right now only Starlink, that division of SpaceX, turns a profit. All right, so can SpaceX's IPO provide liftoff for the space industry? We got some perspective from Rocket Lab president and CEO Peter Beck. He says attention generated by the record SpaceX IPO is a good thing for the whole space industry. He also talked about the race to raise capital in the industry and a potential timeline for data centers in space.
I think space is kind of an interesting opportunity. I mean, it's relatively new to the market, and we listed a few years ago now, and really are probably the only pure play space company at scale here on the public markets. So it's great that when SpaceX lists, it brings a lot of eyeballs and interest and good research to the sector. So I think net it's a good thing for the whole space industry.
Does it make you concerned that the competitive draw from SpaceX will be overwhelming for Rocket Lab?
No, I don't think so. The reality is that, SpaceX is a space company, but it's also very much an AI company and a bunch of other things as well. Rocket Lab is, a very, very squarely focused, pure play space company. And, as I said before, it's, I think it draws investors into the sector. And when they go looking, Rocket Lab is really the clear number two with respect to, launch frequency and those kinds of things. So no, I think I'm not too worried about that.
So do you find yourself complementary to SpaceX, or are you in direct competition with Elon Musk?
Oh, in some cases in direct competition, but also very complementary. We are an end-to-end space company, so we're the second most frequently launched rocket, US rocket in the world, behind SpaceX. So the rocket bit of it is competitive, but 2/3 of our business is building satellites and spacecraft and supplying merchant components to the rest of the space industry. So in that sense, not really a competitor at all.
How do you expect to fund growth in the future, given how expensive launches are?
Yeah, well, I mean, we're one of the things that we've been extremely good at over the years is we've been very, very capital efficient. Rocket Lab was born from a tiny little town at the very bottom of New Zealand, so it wasn't born with the backing of large capital resources. So we've always had to be super scrappy and very very efficient with our capital, and that continues. But luckily, in saying that, over the 20 years of Rocket Lab's history, we've never struggled to raise the capital we need to be able to do the things that we also need to do. And in the public markets, we're obviously that gave us access to a larger quantum of capital, and we've been able to grow, as you can see, very, very quickly in the last couple of years.
Peter, can you lay out what the business case is for the space economy? And this comes at a time when, as you mentioned, SpaceX has a lot of different competing factors. They have, of course, the question of launching into space, but also AI and also connectivity. Is it a national security issue? Is it getting to Mars? How do you see the space economy evolving as central to the economy here on Earth?
Well, that's a funny thing because, it's hidden infrastructure. So, nobody can really see the satellites apart from a whizzing star in the sky and a nice clear night. But the reality is that just about everybody's lives all the time is being influenced and touched by space. Whether you order a pizza and it arrives at your door, well, actually, that was all space enabled through the GPS constellation. And whether you're thinking about getting married on a day and you look at the weather, and that's all coming from space. So space is kind of one of those things that it's like water in the pipes, that it's hidden infrastructure and people don't realize just, how much they use it. But in saying that, the growth in the industry is tremendous because it used to be just the domain of governments. Space is really well and truly now the domain for commercial enterprise. And that democratization of space is what you've seen just grow tremendously over the last sort of, few years.
Are you worried that right now the amount of money being raised will dampen enthusiasm for this sector over the next few years if there isn't the same kind of outperformance as some of the capital raises seem to be promising right now?
Yeah, well, I mean, that's a fact. I mean, it's all about execution at this point. And, once again, that's been something that we've been well rewarded for is execution. So, yeah, of course, if you raise large quantums of capital and then don't execute, then people don't look very favorably upon you. But I guess, for us, we've been able to hold that execution and been rewarded. But, it is a risk in any fast growing sector. And there's always people that promise a lot and might not be able to deliver.
Peter, how far are we away from real data centers in space?
Well, there's a few technical issues to solve, but the physics is sound. It can be done. I'm not really worried about the technical issues there. I'm more interested in the pure economics of it all, because if you think about data centers, it requires a couple of major things to happen. Reduction in launch costs and scaling of a number of technologies, and that's going to be in direct competition to the cost of electricity down here on Earth. So I think, I don't think it's a sure thing that all data centers are moving to space. I think there absolutely will be some for strategic and defense reasons. But I think we're also, it's a bit of a bake-off between, how quickly can those, those orders of magnitude and change and cost reductions occur in space versus down here on Earth.
All right, let's get to our next topic. It's been called a framework agreement that the U.S. and Iran have endorsed, but there's no published text, and both agree there are issues that have to be resolved. Still, the markets embraced the news, sending oil down and markets into the green. Let's get more from Andrew Peak, director at the Atlantic Council's Scowcroft Center. Thanks for joining us today.
Thanks so much.
How much faith do you have that the Strait of Hormuz is going to open maybe in full on Friday, as called for in this agreement?
Well, I think it's reasonable to say we haven't seen the text of the agreement. We don't know what it looks like. We've only heard both sides spinning it to look as good as it can. So, until we see the final agreement, I'm reserving judgment a little bit. I will say that from the initial reports, I'm fairly confident that the Strait of Hormuz will be open. I have not seen anywhere the Iranians bragging that they have the ability to exact tolls on ships going through, which was a major sticking point. The U.S. has also not said that the Iranians can extract tolls. So the fact that that is one of the few points that aren't in dispute actually gives me some confidence.
Okay, that being said, many have talked about underwater mines that Iran has planted throughout that strait as an ongoing danger. Is that a concern? Is Washington ignoring that threat?
Yeah, sure. The Iranian mining capability is something that we've kept an eye on for some time. It is most dangerous when layered with its other surface capabilities. Its speedboat.
Okay, it looks like we may have lost our connection with that guest. We will try and reconnect in just a moment. We're going to take a quick break. Back in a moment. All right, we were cut off from Andrew Peak. He joined us now. He is with the Atlantic Council, and we're talking about that deal between Iran and the U.S. that was announced on Sunday. Thanks for rejoining. I want to talk a little bit more about whether you think this agreement, again, without a published text, will be something that Donald Trump can easily sell to the G7 leaders.
Well, I think the G7 will be happy to have any agreement concluded. They would like to have something that as well constrains Iran's nuclear program. They were all enthusiastic supporters of the JCPOA, Obama's Iranian nuclear deal. So I think they'll be happy that the president has solved that choke point that Iran's put on the Gulf. They'll be very interested in what follow-on details about the nuclear program are included once the text is published. But their top priority, of course, is going to be that the immediate cost of the conflict, the flow of oil and gas, is going to be increased.
Do you think nuclear is still going to be the biggest challenge for these two sides to find common ground?
I don't. I think it'll be the ceasefire in southern Lebanon, how that's linked to a ceasefire on the Strait of Hormuz, what that means for Israeli forces still in Lebanon, what that means for Hezbollah's willingness to attack those forces in place, what it also means for Hezbollah's ability to rearm its long-range missile capability from Iran. The Israelis have said, look, we're not going to sit there and accept that Hezbollah just now has a free pass to build up its missile capability without us intervening, without us doing anything about it. Whereas for the Israelis, they say, well, I know Netanyahu's complained publicly about this deal, but they say, look, if we have a little bit of a security belt to protect northern Israel and the Galilee because our forces are over the border in Lebanon a little bit, and we have a ceasefire, meaning Hezbollah can't attack us, that's not a bad end to the war. I know Netanyahu has strenuously resisted linking that to Hormuz, but that's actually not a bad situation for them to be in.
How different?
I think it's volatile.
How different do you think this deal will be from what was the Obama-era Joint Comprehensive?
Well, that's the big question, and that will really come down to two elements of the nuclear piece. One is there enrichment capability left in Iran, i.e., do the Iranians have some green light to enrich uranium to whatever degree? If they don't have that, even if they say, well, we're going to forego that for 20 years, but reserve the right, then that's a noticeable improvement from the Obama deal, which reversed about a decade of U.S. and international policy and permitted the Iranians to enrich uranium at a low level. So that'll be one piece of it. I haven't really seen any reporting about that yet. The other piece is going to be what happens to the fissile material, the enriched uranium currently still in Iran. Does that get downblended in Iran and just dissipated into Iran stockpiles? Does the president insist on that being removed to another country, including the United States? I don't know. But those, as it was under the JCPOA, but those two things are what's going to make this similar or different to the Obama nuclear deal.
All right, Andrew Peek, I got to leave it there, sir. Appreciate your time. Thanks for joining us.
Thanks so much.
So as mentioned, G7 leaders meeting in France. They started their annual 3-day summit, where the U.S.-Iran peace deal, of course, will be a primary topic of discussion. Let's go to Sean King, Senior Vice President at Park Strategies. He joins us now. Sean, thanks for your time. Donald Trump is hailing this new agreement as a big win, but is it? Do you think other world leaders will see it that way?
Well, Trump hails everything. First of all, I hope it's a success. I think the war was a just cause, perhaps not executed as well as it should have been. But as Bill Maher says, the TV host, Iran is a fascist theocracy, and the weaker they are, the better it is for the free world, including Israel, the U.S., and other friends and allies. But I haven't even seen the text. Your previous guest really seems to understand the region and issue. I would defer to him on these kinds of things. But Trump is, of course, going to say anything he did is great, but we won't know the text. And how can Iran be trusted to follow through, and will they stick to it? All that said, I think the world's in a better place than it was 24 hours ago. Let's see how welcoming the G7 is of this.
Are you surprised Donald Trump even went to the G7 summit, considering his past comments about these kinds of meetings?
No, not at all. He loves to stick it in people's faces. He doesn't get along with most of the leaders, but Macron seems to be one of the people he dislikes less. And he seems to like France or dislike it less than he does other European countries. So I'm not surprised. And now he feels he can take a victory lap with the Iran deal. And who knows, knowing him, when he was in Osaka for the G20 in 2019, he just extended his trip and went up to Panmunjom one day to meet Kim Jong-un on a whim. So who knows? He may show up himself at the signing in Switzerland. This at least gives him the option to do that. So no, I'm not surprised that he's showing up at the G7, despite the overwhelming disdain he has for these organizations and most of its people.
Do you think one of the reasons could be to ask our allied support in this rate, which he's done before?
I hope so. But if he asks, I hope he asks nicely. Remember, we didn't even consult our allies about this. And you look at Europeans have great minesweeping techniques. Ukraine has really perfected the art of drone defense because Russia was using many Iranian drones against it. And not only do we not consult them, but when they offered to help, we said we didn't need their help because the war was already won. So maybe this is a chance for our allies to get in and claim victory on something they didn't really help with. Of course, they weren't asked until it was too late. So, yeah, that'd be great if he found a way to work together with our friends, partners, and allies. But if we do so, hopefully he asks nice and we can build on this going forward.
Do you think he will ask for help, perhaps getting Israel on board? One of the questions that is up for discussion is whether or not Israel will stay in Lebanon.
But he cannot ask anybody for help with Israel. It's other people asking us for help with Israel. You know, nobody has a closer relationship with Netanyahu than Trump does. And I know we like to blame Israel for making things difficult, but just put yourself in their shoes for a second. I mean, they're living on the doorstep of Iran, having had to deal with this for decades. Now, we're friends, but imagine if there were missiles coming into Buffalo or Boston from Ontario. How would we feel in New York State? So you got to put yourself in Israel's position here. But if anybody can talk to Israel, it's Trump himself.
Let's talk about tariffs, because we have Donald Trump now threatening French wine because of their digital services law there. Do you think tariffs are going to start ramping up again if there is closure to the Iran conflict?
Not really. I think that, you know, he's already suffered the defeat at the Supreme Court. Now he's using this special 301 workaround to put these, forced labor tariffs on some countries indirectly. I just don't see how much utility this has. And, you know, what's really interesting is that we had set up through Customs Border Patrol this website where American importers can get refunds on their tariffs. And now the administration is trying to block those refunds. Notice none of our trading partners is complaining about those refunds, because that proves once and for all, it's not they who pay the tariffs, but it's the poor U.S. importers who pay that, even though Donald Trump says something else. So I think this French wine thing is just more bluster, and I don't think it's going to go through. I think we're just sort of settled where the tariffs rates are for the rest of Trump's time in office, hopefully.
The U.S., of course, will take leadership of the G7 next year. Do you anticipate changes, or what will that influence look like?
Yeah, maybe there'll be a UFC fight in front of it, or a NASCAR race.
That's true.
Or maybe he'll time it with his 81st birthday and have it at the golf course. Maybe there'll be a putting contest with the different leaders. I'm sure Trump is going to do it in a very unique way that no one will forget. So I have no insight to what it can be. But as Trump would say, it'll be a G7 like you've never seen before. That we can be assured of. But
because he doesn't like these international organizations, is there even a chance he will pass on the presidency?
No, definitely not. He will look, just knowing what I know of him from afar, he will relish every opportunity to make these people's lives uncomfortable and subject them to things on his turf, the inverse of which he thinks he's had to put up with there. So I do not see him missing this opportunity to make these people uncomfortable and show them what he thinks is the real America.
Sean King, got to leave it there, sir, but thanks for your time as always.
My pleasure. Thank you.
Coming up next, stocks rally, oil slides on that U.S.-Iran peace agreement. More in a moment. Here are the stories we are following in the newsroom today. Watching the price of oil after the U.S. and Iran agreed to extend their ceasefire and reopen the Strait of Hormuz. Iran insists any agreement must include an end to the fighting in Lebanon, but Israel's defense minister says the country will not withdraw and that Lebanon's not part of any deal. Shares of Canopy Growth falling today after the cannabis producer posted revenue in its latest quarter that fell short of estimates. A bright spot is the company reporting a smaller loss and saw overall revenue rise 10%. The revenue boost driven by higher sales in its cannabis unit and its medical segment. The company expects net revenue to grow in fiscal 2027, helped by higher margins and cost-cutting measures. Fairfax Financial buying Canadian winemaker Andrew Peller in a deal valued at $579 million. The insurance and investment company will buy all of Peller's shares at up to $12 apiece, representing a premium of up to 70%. The acquisition will end decades of control by the Peller family. The company operates wineries and hospitality venues in Ontario, BC, and Nova Scotia. The TSX is up today 266 points. It could be a new record close for the TSX, sitting right now at 35,224. Let's go south of the border, also in the green. The S&P is up 1.7%. The Dow Jones up over 1%. And the Nasdaq up 739 points right now, or 2.9%. So metals and mining stocks, big gainers today. That's what's pushing the TSX. Let's get more market reaction and investment ideas from Ryan Bushell, the CEO and portfolio manager at New Haven Asset Management. Thanks for joining us today.
Thanks for having me, Marella.
Okay, so mining, we saw stocks, metal stocks, double digits up today. Can you explain a little bit more about what is behind the surge?
Wish I could. Basically, it's interesting, especially the precious metal space has become more correlated with the risk-on moves. So when you see NASDAQ up heavy lately, it seems to take gold with it, which is somewhat interesting because you would think what's driving gold is more kind of the uncertainty in the world or maybe inflation. But it seems right now it's more of a, risk on or negative correlated to the US dollar trade. So that's the thing about gold. It's a bit of a shapeshifter, and right now it's performing more like a risk asset.
All right, let's get to oil, which we know is down today, having around $80. Do you expect more volatility either because the deal falls through or unwinding the damage in the Strait or other parts of the Middle East will take time?
Yeah, I don't know if it's going to result in volatility, but I don't think it's going to result in a collapse in oil prices back down to where we were pre-conflict. I think there is lasting kind of impact from this situation, and oil prices really never got high enough to destroy enough demand such that you would see a supply glut emerge again. So I think you're going to see oil prices range bound here, and I think it's actually probably a good thing for the energy market to start to see, where do these fundamentals ultimately bear out once we have somewhat of a normalization through the Strait of Hormuz. I don't think we're going back to where we were before. We're obviously not going to stay where we are today, so we need to find where's that normalization point, and I think it's actually going to be positive, relatively speaking, for crude oil and products.
All right, where is the new normal? Let's get to SpaceX. Not a normal, definitely. And I know not really the kind of investment you make, but do you think it can sustain the investor excitement it's showing today?
We'll see. I mean, right now, this is a good example of kind of modern market structure and how things work today. There was a limited amount of shares that, first of all, were offered from the company. So when you see a $2 trillion valuation, there are not $2 trillion worth of shares trading. There's actually a small fraction of that trading. Most of the retail allocation is locked up for months. If you saw, the lockup periods for things like Robinhood and E-Trade and things like that in the U.S., you also know, early investors in this know that there's a passive wall of buying coming or happening presently as well. And again, this is on a limited amount of freely trading shares. So we will have to see. Fortunately, and I think it was wise that the S&P did not waive their 1-year seasoning period for an IPO this size, just given all these dynamics at play. I think it does make sense to let this settle out, and that's what I'm waiting to see. I'm waiting to see, a couple quarters of results. I don't think we're going to be hitting that 1 million people colonizing Mars bonus anytime soon for Elon Musk. So there's a lot still to be done for this company in terms of results, and now that those results will be public and facing the scrutiny of the analyst community, we'll see if it sustains the valuation. Clearly, what's driving it today is not necessarily the fundamentals of what the results are and what they will be in the near term, but ultimately it will take some sort of tangible progress to keep investors excited about this story.
Okay, let's get to NVIDIA, reported to be planning to raise $20 billion U.S. through bonds. That's coming from Reuters. And Alphabet, of course, already announcing an $80 billion stock sale. What does this tell you that these companies, as large as they are, need to raise more money? Is that just AI CapEx still?
It's quite interesting, Marilla. Like, if SpaceX is part of this as well, right? So them opening the IPO window and it being so successful out of the gate is going to embolden more equity issuance. So we will see how, if and when OpenAI and Anthropic come to the table later this year. But the debt issuance has been happening in the background. I know Amazon did a $14 billion Canadian debt issuance. I think it was just last week that was quite well received. And just the amount of capital being issued by these companies and that's being absorbed by the market further and further into an AI CapEx build that has uncertain consequences in terms of, first of all, even if we build all these data centers, can we power them? So I keep looking at the physical constraints, but the monetary constraints are how is this going to be monetized, and are these companies going to be successful in converting this into revenue that is, back to free cash flowing where these companies were 3 or 4 years ago. The free cash flow in these companies has all but disappeared or is in the process of disappearing. And debt investors are less friendly when it comes to, waiting for the future than equity investors are. They're less forgiving because they're looking at a payback period, whether it's 3 years, 5 years, 10 years, and looking at that maturity as an all or nothing. So I watch it with interest. We are not involved, and we'll see ultimately where the breaking point is.
Okay, let's get back to the top and talk about oil, because you like Canadian Natural Resources, and I'm wondering, is that based on a pullback of oil today? Is that based on, of course, a solid company long term? I mean, if the price of oil does pull back, would you wait for that pullback before stepping in if you were a new investor?
Yeah, I'm not that picky because I think the move in Canadian Natural Resources over the past 12 months was a lot of that completed before the oil price spiked up. So it did spike up along with oil to 74, and then kind of came back into its trading range in the sort of low to mid 60s there, as you can see on the chart. And I think that the stock will live there going forward. You've got a massive share buyback. Again, contrary to looking at these AI companies, if you take a look at Canadian Natural Resources balance sheet, they're rapidly paying down debt, rapidly buying back stock, not issuing stock, increasing the dividend every year. This will be the 26th, I believe, straight year of dividend increases. And so when I look at this company at $61, yeah, maybe if you're lucky, it pulls back into the middle of that range on the chart there, 55 or so. And we'd be happy to buy more there. But even today, it's got a $2.40 annual dividend. We're going to collect that indefinitely into the future with dividend increases. To me, this is just a fundamental company that you want to own. And you have the upside case where I think both oil and natural gas, which is an overlooked part of CNQ, have higher floor prices going forward after this conflict. So I like it quite a bit at these levels.
Okay, let's get to quickly your next pick, which is K-Bro Linen. And I talk about this one every once in a while when it pops up because it seems like the most boring sort of investment, right? It's literally laundry, but is there a catalyst to wanting to invest in it now?
Well, and again, we're not big on, soon near-term catalysts as driving our investment process. What we are looking for is solid, boring businesses that can withstand, sort of any type of environment. But it is interesting. They did an acquisition kind of mid to late last year, and the market was initially excited about it, but then, the shares kind of drifted off there, as you can see, sort of from late August through to April. But since April, it seems to be garnering some more investor interest. And if you take a look at the big holders of this name, they are names we respect and get along with from a philosophical perspective. So it's not a very big company. We think it's well managed, and that's why I brought it to the table today. It's probably the exact opposite of SpaceX. Very tangible, will be in use well into the future. Sort of no matter what happens, very down-to-earth, grounded business and a great management team. So we like that. We'll collect our 2.5% to 3% dividend yield, and we're pretty optimistic that this management team is going to drive results that will include an increase to that dividend down the road, and it makes an excellent takeout candidate for a private equity firm or something like that as well.
Got it. Brian Bushell, good to have you, sir. Thanks for joining us today.
Thanks, Marilla.
Coming up, Canada's Industry Minister Melanie Joly has her sights set on Asia. She's in China and then going to Japan. More in a moment. Canada's Industry Minister Melanie Joly has started a 9-day trip to Asia. She will stop in China and Japan. For more on that, let's go to Bloomberg's Vancouver Bureau Chief Thomas Steele. He joins us now. Thomas, thanks for your time. Who are the business leaders traveling with the minister? It'll tell us, of course, about the focus of the trip.
Yeah, absolutely. The story in this case is almost 50% the list itself and what that says about the objectives. Accompanying Minister Joly on her trip to China, we've got the Rio Tinto chair, we've got the CEO of Canada Goose, we've got the CEO of Cameco. So we've got resources, we've got consumer, but then there's a whole bunch of financial CEOs and chair people. So Canada Pension Plans, Sun Life, British Columbia Investment Management, Power Corp. And so it's quite interesting. This is a development potentially on the existing trading relationship that Canada has with China, which, I would say revolves around exporting bulk commodities like soybeans and meat. This is a bit more of a sort of developed conversation. And then the Globe and Mail is reporting also that Minister Joly will be meeting with EV makers, vehicle makers in China about that story as well. So it looks like quite an interesting trip setting up.
They have 4 or 5 of the EV makers in China that they're going to have talks with, apparently. But we know that Canada is going to accept a limited amount of Chinese-made EVs. What do you think is on the table in that discussion as far as what Canada will want to allow these car makers into the Canadian market?
Yeah, and in fact, we've reported that those vehicles have already started to arrive under that Chinese EV quota. Many of them are Teslas, made in Tesla's Shanghai factory, but some others made by Lotus Geely are also already arriving here in Vancouver and moving beyond. What they will talk about, well, it looks like Jolie told the Globe and Mail they will be talking about potential export markets, because Canada on its own is probably not a big enough market to soak up the demand of a factory by itself. The US is not likely to take Chinese EVs anytime soon, based on what people out of Washington are saying. So could they export them, for instance, to the EU, where there are already Chinese EVs? Australia already has a lot of Chinese EVs. So that's an interesting part of the conversation. Jolie's conversations with businesses are often about the wider economic benefits of any deal, so spillovers in other sectors. I mean, it's not clear at this point, but I think it's going to be more than just setting up a factory. They'll have to work out some quite complicated economics.
All right, I do have to leave it there. Thomas, thanks for your time. Appreciate it.
Thank you.
Canadian fintech company Nuvei making a major bet on global payments. We speak with the CEO in just a moment. Nuvei is expanding its global footprint. The Montreal-based payments company has agreed to acquire Payoneer in a deal valued at about $2.75 billion US. We got more from Philip Fayer. He's CEO of Nuvei.
Nuvei has been extremely successful on the pay-in, helping our customers, connect with their customers to collect funds in currency in markets where they operate around the world, about 52 different markets where we're licensed. And today we're operating with the acquisition of Payoneer on the other side, for them to do cross-border and payouts. So the combination is extremely exciting. It creates a unique infrastructure capable of handling all forms of fintech requirements for our customers around the world.
Okay, can you expand a little bit more on what Payoneer brings to Nuvei that perhaps your company could not do on its own, or would take too long or too much money to do on its own?
Yeah, for sure. In simple terms, we manage pay-in. So if you're a business and you want to accept payments from a customer in Colombia or the United States or anywhere around the world, one integration to our platform, and we'll manage the ability for you to collect those funds. Payoneer, on the other hand, does the exact opposite. So once you've collected those funds, we'll deposit them in a local bank account. Payoneer allows our customers to have virtual bank accounts and be able to receive funds from multiple sources. Typically, where Payoneer operates are Amazon, Etsy, eBay, TikTok resellers. Well, they'll consolidate that, receive the funds, and then enable real-time cross-border payments. So the combination is really the other side of the coin that we operate on, which is just an incredible opportunity for the combined companies.
Okay, I want to talk about your clients in just a moment, but the companies are going to, as you say, together support more than 190 countries, I believe, and territories. How important is it today to have that global scale?
It's critical, and not only the countries that you operate, but there's also licensing. So, Nuvei's licensed in a myriad of countries. Payoneer's licenses are an extension to ours, including licenses highly desirable in China, as well as India, amongst others. So it's a licensing, it's a local operation, it's a local capabilities, and merging the two together is really a wonderful cross-sell opportunity.
I was going to ask you about the Chinese and Indian markets, how important or how key to the acquisition were the access to those markets?
Very much. We're enabling customers around the world. And if you think about it, China and the United States are locomotives, and the ability to support Chinese businesses as they continuously expand their footprint around the world is exciting, as well as having that local license to repatriate to operate within the Chinese framework, which is, a new framework that many companies are struggling to adhere to. So this is extremely additive to our current roster of clients that are either operating in China, that are looking to receive funds from around the world, or expected or looking to enter the Chinese market.
Are those countries, as you sort of touched on, faster to embrace different kinds of payment methods than perhaps North America or at least Canada?
Well, they understand it quickly. It's fascinating is some of our large Asian companies are opening a new market a month. So just their growth is unbelievable. And to enter those markets, you have to have all the local payment rails. So most people think, I'm going to set up and I'm going to set Visa, MasterCard, but there's local payment options. You think about Canada's Interact, but sometimes there's 5 or 6 different requirements that you need per country, both on the way in and the way out. So yes, it's fascinating. They need the payment mediums. They need the ability to both collect and pay out. And their appetite to expand globally is insatiable.
Okay, so let's talk a little bit more about clients. You mentioned, for example, Payoneer has some of the bigger clients because you're looking to serve digital commerce, essentially, the Amazons or the Etsys, those kinds of businesses. Did you already have those clients on your own? Are they coming through you through Payoneer?
A little bit of both. So, Nuvei services great brands like Microsoft and Ticketmaster and others. Payoneer, and we have a smaller marketplace business. Payoneer has an extremely successful marketplace business where they've been focusing on the Amazons, the Shopifys, the Etsy's, and others. The combination is so attractive just because we're going to help them go up market and we're going to be able to execute around, paymentizing the marketplaces that they support today.
Let's talk a little bit about fintech in Canada. How would you describe the ability to easily adopt fintech in Canada compared to some of the global peers?
Look, I think Canada, first of all, in fintech for us, it's borderless, right? Because businesses have to operate around the world. I think Canada has an incredible framework now. We've set up the MSB, we set up licensing in Canada now that I think has created more clarity around it. But Canada is still such an attractive opportunity. We have great talent, great know-how. We have nothing but capability in Canada. So the way I would frame it back is fintech is an important part. I'm really proud to be Canadian. I'm really proud of our Canadian innovation. And there's so much can-do opportunity in Canada, but it's not restricted to the borders of Canada. We're born here, but we operate, around the world with 5,000 employees. Okay. Are there one or two things you would do within the country or ask of the government, for example, as it moves more towards modernizing the law that they could do, either sort of through regulation or licensing? Yeah, the couple that come to mind is we've been slow on stablecoin and digital assets. I think that is a wonderful opportunity. I think the fact that we've now set up MSB and regulation is a positive, and Canada's moving in the right direction. But overall, we should be innovating here, right? To bring investment dollars up to Canada so that we could be pioneers. Other countries have been ahead of us. I think stablecoin movement is positive, but we're still many years behind what's just south of the border. All right, Philip, what else for this current deal? When will it be complete? What else has to shake out before that happens? There's a regulatory framework, so it'll be first half of 2027. That's Philip Fayer. He's CEO of Nuvei. A last look at the markets before the end of the trading day. There in the green today. TSX up 0.9%. The S&P up 1.5%, just over that. And the NASDAQ up 2.9%. We'll have the end of day numbers when we come back. Stay tuned. Here are the closing bells for the end of the trading day. At the NASDAQ, LinkedIn ringing the bell. For New York, it's CGI celebrating its 50th anniversary of its founding. For the TSX, it's CES Energy Solutions to close the market, celebrating the company's 20th anniversary of being listed on the TSX. They're watching the close on BNN Bloomberg. I'm Morella Fernandez. Here's how we ended the day on Bay Street and Wall Street. Markets moving up today on news of an agreement between Iran and the U.S. in hopes that the Strait of Hormuz will reopen again at some time this week. The TSX Composite has a new record close at 35,275. It's up almost a full percent today, or 337 points. That beats the last record from June the 4th. The S&P 500 up 1.7%. And then the NASDAQ up 3%, or 795 points today to 26,683. Materials moving the market in Toronto. The sector is up more than 5% last time I looked. So let's go to G Mining Ventures. It's up 13.4% today, or $4.97, taking the share price at $42.17. Montage Gold is also up today, double digits, 10.5%, or $1.67 a share. Over the last year, it's up 288%. Gold and Silver, a gainer of 10.5%, or $2.74 per share to $28.87. And then Denison Mines also gaining today. It's up 8%, or 36 cents to $4.64. On the flip side is energy again. Oil going down on the hope that there will be a resupply of energy moving through the strait. So Baytex Energy down 5.3% today, or 34 cents a share. Methanex is also down today, over 5%, $4.33 down per share to $78.78. And then Vermilion Energy also moving down 5%. Now it's up 32%, over the last year. The share price today at $14.79.
Let's have a look at some of the movers south of the border. Bloomberg senior equities reporter Bailey Lipschultz joins us now. Bailey, day two of trading for SpaceX after that massive IPO on Friday. Is the stock still moving up?
Still moving up and actually moving sharper than I think many on Wall Street would have anticipated. Last I checked, it was heading towards around 20% up on the day, so well above the intraday highs on Friday. Certainly one thing to keep in mind, today was the first day for those levered ETFs, so that can create some forced buying, a lot of excitement for options to be listed in the next day. And then we look ahead to the inclusion in some of those ETFs like the NASDAQ 100, the QQQ, as well as kind of the inclusion in some of those indexes, including the Russell's family. So as you can see, a sharp move up and to the right. Again, I think stronger than many people were expecting, but all things considered, this is now one of the most valuable companies in the world. There's a lot of excitement around Elon Musk. The big question will be, how does the market continue to address this company in the coming days and weeks when there is not a true catalyst and as the, call it euphoria around the actual IPO starts to wear off?
Okay, let's get to Fox, which is buying Roku. I'm wondering what you think of the deal. How's it playing out for investors?
Yeah, we saw a sharp sell-off in Fox, the worst day on record, I believe. A well into the double-digit move drop for the company, as you can see. This comes after that move to buy the company at an enterprise value of $22 billion. The big debate on Wall Street from the analyst perspective is Fox is a company that, as you can see, had been trying to right the ship, work out some of its kind of puts and takes, getting investors back on board as it relates to being a turnaround story. Now this seems like it's adding to another question mark. The big pitch is the untapped potential with people who are actually streaming via Roku, the interactive ad platform that brings. But again, this is a company, this is a deal that is both cash and stock. So Roku was under pressure after news on Friday from Bloomberg that sent the shares up 20%, but both stocks under some pretty strong selling pressure today on Monday.
Okay, let's get to Fiserv, which shares were down double digits last I looked. What happened there?
Exit from the CEO. Some analysts kind of pounding the table saying this is an opportunity to buy on a company that was trading at the lowest level since 2016. But as you can see, that's a pretty ugly chart. And when you look at the expectation going forward, this was a surprise. Not many people had on their bingo card the exit of a CEO, let alone an exit to Truist. Many people are big fans of the new CEO talking up his relationships within some parts of the business. But the big question going forward, Fiserv was, again, another one of those turnaround stories. They reiterated their expectations from a financial perspective. But again, if you're an investor who is starting to buy the idea of the CEO, now trying to get reacquainted with new management team and the knock-on effects that can bring, that's why we saw the sharp move lower today. And so it'll be an interesting story to track in the coming weeks and months as people start to get their hands around the new CEO.
All right. Bloomberg's Bailey Lipschultz. We'll leave it there. Thank you, sir. Up next, key risks for investors amid market optimism with the end of the Iran war. We'll have more in a moment. North American market surging on an end of the Iran war in sight. My next guest believes investors should remain cautious. For more on the key risks that remain, David Dietz joins us now, Chief Investment Strategist at Dietz Wealth Management Group. Thanks for joining us today.
Thank you. Good afternoon.
How close to a resolution do you think this conflict really is?
Certainly, the word that we got from President Trump on Sunday saying that a deal had been signed and that everything had been agreed upon with Iran is what's driving this market forward today. Indeed, the Dow and the Russell 2000 hit all-time highs today, and the NASDAQ and S&P 500 doing extremely well, close to all-time highs. But the problem, I think, for investors is we've seen this movie before where it's one step back, one step forward, one step back, and so forth. And so, you know, the signing is going to be on Friday. But one of the key reasons that the United States went into Iran, which was to reduce the threat of the use of nuclear power in a war situation, has not been satisfied at all. The only leverage we have right now over Iran is that they're not going to get any economic benefits from the agreement until that's done. But we've seen for many years in the past that just sanctions alone are not enough to push Iran. And so, you know, we could easily be in a situation where we've got to go back in there. And of course, our key partner there, Israel, says this is an unsatisfactory arrangement. So we don't really have their support too. So I think investors need to be alert to a breakdown in what seems to be a peace accord here.
Okay, so they need to be alert. Would you make any moves today?
Certainly would not be adding to stocks based on this. What we've been doing for clients the last couple of months is when things get pessimistic, when President Trump has said tonight is the night when all hell breaks loose, that's when we've been buying. And then when he says everything has been agreed upon, a deal's going to be in a couple of days, that's when we start pulling back. So I'd be cautious here.
Okay. Let's talk about the fact that the American president is now threatening to levy tariffs on French wine if France doesn't get rid of their digital service tax on American tech revenues. Canada, of course, was in a similar position. Are tariffs now reemerging as a weapon?
Well, they never quite went away. What we have seen, I think, is one, we've had the Supreme Court, of course, has ruled some of the tariffs were unlawful, but there are other ways to get around their ruling by enacting tariffs in a different fashion. We have seen economic pressures have pushed Trump back from tariffs. But that tariff tool is still in the toolbox. And as you just pointed out, it's been threatened now against France because they have a 3% digital tax against U.S. tech company sales in France. They're going to have 100% tariffs on French wine. So the point is that to the extent the investors say it's blue skies going forward because tariffs are behind us, potential trade barriers are no longer an issue, geopolitical concerns have been put away, think again. They have not been put away. And so there's another reason to be cautious about the current rally and situation.
Let's get to a couple of the movers today. SpaceX, of course, had a big debut on Friday. It's day 2 of trading, and it seems to be still doing well. Can it sustain?
So who knows? I mean, you're trading at 95 times revenues, which I guess is better than the dot-com era when many of the companies had no revenues whatsoever. But, the fact of the matter is Tesla, the market trades about 3.5 times revenues. Tesla came out at an extraordinary valuation at 20 times revenues. This is 95 times revenues. Now, we love the Starlink business. I can't wait to get a nice internet service when I fly in the U.S. airplane. But the fact of the matter is, I'm not buying into a colony of 1 million people on Mars anytime soon. That's not how I will invest my money, my family's money, or my clients' money. That's just pie in the sky, moonshot, Mars shot thinking. Furthermore, of course, they've got some great AI resources there. But the fact of the matter is many experts have panned Grok as the best AI tool. And of course, we've got a lot of competing AI things which are going to bring down prices and so forth. So I would say stay clear of SpaceX at this point.
Okay, let's get to another mover today, which is Fox sliding after acquiring streaming device maker Roku. Why do you think the stock is down? Do investors not like the deal? Are they not thinking it's a good match?
First of all, there's always the price. They're paying a healthy premium, a good 20% over what the price was before. Fox is going to be taking on $12 billion of debt. One reason people like Fox is they were very disciplined in the use of debt. Now that is going to burden their company. We like Roku because it's kind of like the gateway for many traditional distributors of media to get into the streaming service that customers want and give them another avenue away from cable. But on the other hand, to the extent that Fox controls Roku, will some of the other users coming from other media producers say, hey, I don't want to have to go through a Fox device in order to get to the people. We're no longer going to use Roku. And to the extent that they kind of feel like they have to, well, guess what? U.S. antitrust authorities are also going to be taking a look at this to see whether this makes sense. So I think there's a lot of questions here, and that's why I think, as I say here, Fox is getting a big Bronx cheer from investors on the news of this deal.
Let's get to one or two of your stock picks while we have some time. One of them has dropped quite a bit from their highs. That's a pet products company, Chewy. What do you like about Chewy?
So Chewy was close to $100 a share during the height of the pandemic as everyone bonded with their pets because they were staying at home. The price is close to $100 a share. Now it's about $20. But the fact of the matter is they have a great business, which is basically providing pet supplies online via e-commerce. They have grown that business consistently over the years. It was way overpriced in the pandemic. At this point, it's about 12 times earnings. So we think it's very, very cheap. What I also like is they're getting into the pet healthcare business. They have made a purchase recently of a business which expands their chain of clinics for people to go and bring their pets in. And they find that people who use those clinics for their pets also are more likely to buy normal pet supplies from Chewy. So we think, given the low valuation and the continued growth that we've seen in the pet business, Chewy is a buy right now.
Okay, let's get to your next pick, which is Intuit. So they do QuickBooks and TurboTax. And I know a lot of people are worried that AI is going to develop a product that can do that and take away from that kind of business. You don't have the same concerns?
Well, certainly we have the same concerns, but the fact of the matter is a couple things. One is that Intuit is partnering with Anthropic, partnering with OpenAI to incorporate AI in their beloved products for bookkeeping, QuickBooks, and for tax preparation, which would be TurboTax. A. B, as their CEO points out, this is the type of thing where you're doing your company's books, where you're filing taxes with the government, which have legal requirements for misstatement. People don't want to just rely on AI by itself. They appreciate the assistance AI can bring, but they also want that human help. So the thinking is that people are not going to dump using their tried and true TurboTax and QuickBooks to go to some unknown AI product. Of course, at the same time, the stock price has dropped by about half. They've been increasing revenues by double digits going forward. So we think this is a situation where people are worried about AI, but we've seen no evidence at this point has had any effect on their business. Their latest quarter was very stellar. They're paying a good dividend. That dividend is increasing. And so dividend investors will appreciate that the dividend growth looks to be very good going forward on this stock.
Okay, let's quickly get to your last one, which is Lyft. Why Lyft versus Uber?
So Uber trades by various metrics at a price that's 3 times more than Lyft. So I say to myself, if I'm looking for a ride to go from the airport to my home, will I pay 3 times more for Uber? Guess what? I will not. So why would you do that in the stock market? What I love about Lyft is you've got the transportation market in the United States is 1.9 trillion. In the overall world is 5 trillion. Lyft's market cap is only 6 billion, which is about 1/3 of 1% of the whole business. And Lyft is just trading at about 5 times free cash flow. It's super cheap. And there's all sorts of companies I believe would love to buy out Lyft or at least expand operations. Number one would be DoorDash. Uber bought Delivery Hero to expand its operations, but I see much larger DoorDash perhaps buying Lyft. Also, I opened up my app for my United Airlines here, and there it was. If I use Lyft, I got United mileage, and I could, or when I earn miles on United, I could get free rides on Lyft. So Lyft is starting to partner with all the big operators. They're number 2 in the business. There's always going to be a number 2 in this business. The stock is too cheap. Buy Lyft today.
All right, got to leave it there, David Deet. Thanks for joining us. Appreciate it.
Thank you.
Coming up next, Canopy Growth reporting earnings results for its fourth quarter. We heard from the CEO when we come back. Canadian cannabis company Canopy Growth reported 27% revenue growth for its Canadian medical cannabis business for its fourth quarter. The CEO, Luc Mongeau, joined us today to break down what's driving the numbers.
The bulk of that growth was organic, and the acquisition of MTL came in the very last few weeks of fiscal 26. So all this was driven by the hard, dedicated focus work of our teams as we continue to improve the quality of the services and the products that we provide with our medical patients across Canada. Okay, obviously, as we know, you operate in other countries in the world as well, distribute there. So international cannabis revenue increased by 68% in the Q4 time period for you. I know there were supply chain challenges previous to that. So was this a rebound effect? It was absolutely a rebound effect. We've proven in Europe when we have quality flour available, we can do extremely well. Sadly, we were challenged during fiscal 26, and we focused quite a bit of effort in making sure that we reset our supply chain, our global supply chain. So lots of effort going into cultivation in Canada and into deploying resources in Germany to make sure that we could reignite this market. And we're thrilled and we're encouraged by what we saw in Q4, a 68% growth year over year. I was in Germany and Poland last week. Our teams are ready. They're on the ground. We've already rebounded in Poland, where we rebounded to number 3 position in Poland behind availability of great flour. We've shipped our first MTL strain to Germany very recently. So we're very confident that we will achieve significant growth in fiscal 27 across Europe.
Okay, so what was the challenge with the supply last year? Was it quality of product? And I see you have an inventory charge of $10.7 million. I'm wondering if that has to do with switching suppliers.
They're separate issues. And at Canopy, we aspire to be one of the global leaders in bettering lives through cannabis. And this starts with quality flour, quality flour grown at scale, efficiently, consistently. And frankly, our system and our resources weren't geared to produce that reliability, that consistency, that quality of flour. So that's why we went back to basic. We re-engineered the business. We acquired an MTL. And one of the key drivers of the acquisition of MTL Cannabis was their know-how, their knowledge, their capabilities in growing good quality at scale. And we're now in a position with the integration of MTLs. We've been operating together for the last couple of months. We're seeing tremendous improvement in the quality, the consistency, the efficiency at which we now grow flours. And we're confident now of the robustness of our global supply chain to bring great products to Europe.
All right. Now, the $10.7 million charge for inventory, how did that originate?
Yeah, that happens. This type of things happen when two companies get together, where you've got redundant inventories, overlapping inventories, brand, product categories, and everything. So we moved swiftly in the first couple of weeks of our integration to make sure that we would start fiscal 2027 with what you would call a cleaner slate, where we've got focused inventories, focused portfolios of brand and SKUs to really continue that growth that we saw in fiscal 26, both in Canada and in Europe.
Okay, so that would be a one-time charge there.
Absolutely, absolutely.
Okay. Adult use cannabis revenue grew only 1% for the last quarter, despite stronger performance in vapes, I guess, and infused pre-rolls. So what's preventing faster growth in that segment?
Yeah, there was a bit of a slowdown in the last quarter, but the trends are about 3 to 5% growth in the Canadian rec market. And for focused discipline LPs, operators in Canada, there's still tremendous opportunities for growth. For us, we continue our efforts. Our brands are stronger. Our portfolios are stronger. We invest more in innovation. We're focused on 3 categories that still represent for us a tremendous amount of growth. It's flour, high quality flour at a variety of prices. It's infused pre-rolls and pre-rolls that are still growing extremely fast, and vapes as well. So we're very confident in the underlying fundamentals of the market that represent tremendous growth for Canopy.
Okay, you're also in medicinal marijuana. The U.S. is reclassifying that to more align with the states. How does that affect your company?
Yeah, for us, there's no real impact short term, man. We're very disciplined. We're focused. For us, we've been very clear, and we've been saying the same messages. We're focusing on the fundamentals. We're building really strong foundation in Canada. We're focused on the near-term opportunities that will drive Canopy to positive EBITDA and positive cash flow generation. So for us, it's Canada and it's Europe, and it's paying off for us, as we saw in fiscal 2026, and we move into into fiscal 2027 with really good momentum. So we will not move away from that focus strategy. That being said, we know the U.S. market will eventually be an extremely large, sizable market, and we're very encouraged by the positive inclination of this administration to gradually change the regulation of the market. So we saw improvements on the medical side of things. Does not impact Canopy, but it's a great move in the right direction. And we're staying close to what this administration is doing with the cannabis market.
Okay, the last quick question here is about the illicit market in Canada and what challenges, if there are still challenges that remain there.
Yeah, I mean, it is still a very large market. For us, with other LPs, we focus on improving the quality of our products, the quality of our innovation, and working on efficiencies and cost control to make sure that our products really honestly rival and exceed the performance of the illicit market, and where consumers turn more and more to our products when it comes to satisfying their needs.
That was the Canopy Growth CEO, Luc Mongeau. We're going to take a quick break. Back in a moment. Here are the stories we are following today. Oil prices falling after the U.S. and Iran agreed to extend their ceasefire and reopen the Strait of Hormuz. But significant challenges are still there, because Iran insists any agreement must include an end to the fighting in Lebanon. But Israel's defense minister says the country will not withdraw, and Lebanon not part of any deal. Prime Minister Mark Carney in France for the G7 summit. He says the war in Iran will be the main topic there, adding he will have an opportunity to see what Canada and other countries can do to help reinforce progress on peace. The Prime Minister has been clear that a durable ceasefire must ensure safe transit through the Strait of Hormuz and address Iran's nuclear program. The industry minister Melanie Joly in China this week to meet with 4 companies considering building electric vehicles in Canada. They are BYD, Chery, Geely, and Shanghai Launch Automotive Technology. The aim is to boost investment in Canada's auto sector. The minister wants to see Canadian companies manufacture for Chinese EV makers. Shares of Payoneer closed higher today after Montreal-based Nuvei agreed to buy it for $2.7 billion US. The combined company will create a single partner to accept, hold, and move money across more than 190 countries. It's expected to generate about $3 billion in annual revenue. Copper rallied today as the U.S. and Iran struck an interim agreement to reopen the strait, easing a key risk for commodity markets. We got perspective on what it means for the copper market from Ivanhoe Electric CEO Taylor Melvin.
This is certainly an important and positive development for the global economy, and I'm excited to see the announcement yesterday of a peace agreement to reopen the Strait of Hormuz and end this conflict in the Middle East. And so anything that really helps the global economy is important for copper. So we are, beyond the positive geopolitical implications, we're very happy to see what it means for the global economy, and copper is a huge part of that.
We've seen copper prices just shoot higher, not only throughout this conflict, but over the last, I'm looking at a 10-year chart, we've gone from $2.50 a pound to almost $7. Is that trajectory in place? Does copper seem like an asset that's going to continue rising in price?
That price stability and appreciation, I think, is indicative of investors' recognition of the importance of copper to all aspects of our global economy. And so, while we see copper prices today around $6.50 in the U.S. and around $6.20 on the London Metals Exchange, that positive trajectory is just really evidence of the importance of copper to all aspects of the industrial economy. And while there are several important specialty metals that we need for niche components of the aerospace, defense, and technology industries, we really need copper for everything in our economy, from generating and transmitting electricity to building out all the infrastructure that's so critical as countries around the world race to build out the infrastructure necessary to support artificial intelligence.
And maybe that's why potential tariffs are so notable. Taylor, it's a story we've seen that play out before. Last summer, the market was getting ready for copper tariffs, only to have the administration walk that back. Now we're approaching a June 30th deadline, and you see the CME LME spread widening again. You have players like Trafigura that have started to aggressively hoard copper in U.S. warehouses. Is it right for the market to start to adjust to this time around, or should the expectation be that the White House yet again might walk back any sort of tariffs on the refined metal?
You know, I think it's important to note that the LME copper price has also remained very resilient and is well north of $6 a pound. And so this premium that we're seeing in the United States on the potential for future phase tariffs is important. And I think one of the most important things that it does is it really highlights this administration's focus on the importance of copper to the U.S. And so while we've seen about 500,000 tons of copper come into the U.S. warehouses and COMEX warehouses and inventory shifting from around the world, I think, tariffs are just one piece of a larger support structure that this administration has put in place to encourage domestic development of resources that we need to secure our own supply chain. And so we're happy to have that support for copper, and we'll watch closely to see what happens on June 30th. But even with or without these tariffs, the support that we're seeing across the board for domestic mining is very important.
So you're getting streamlined permitting. I know you have a big project in Arizona. Have you got a partner to work with on that project? How's it progressing?
Well, we own 100% of our Santa Cruz project here in Arizona, about an hour south of where I'm standing here in Phoenix. And we own that project entirely. It's on private land. We own the mineral rights and the surface rights. We're working very closely with the U.S. Export-Import Bank on a project debt financing package. We're also working closely with a large group of commercial banks to round out a financing package. We've got tremendous support for this project because, as I mentioned, it's a high-quality, high-grade project an hour south of Phoenix, Arizona. We've got tremendous access to existing infrastructure, and importantly, we'll be producing copper that does not require a smelter to be turned into refined metal. This copper will be produced as pure copper cathode on site, ready for entry into the U.S. industrial complex.
So you won't need a partner at all on this project?
We're certainly talking to potential partners on the financing front. That could include investors at the parent level or the project level. But at this point, we do own 100% of the project, and we're advancing discussions with, as I mentioned, U.S. Export-Import Bank and commercial banks for project debt that would be secured by the project itself.
Ivanhoe Electric CEO Taylor Melvin there. Coming up, hot picks. We'll zero in on 3 software stocks when we come back. Time for hot picks, and we zeroed in on 3 plays in the software sector with Thomas Martin, Senior Portfolio Manager at Globalt Investments.
It's been a minefield, and I think a lot of that has to do with perceptions of what AI is and isn't going to do to various vendors. And so, at the point where, you weren't going to need dedicated software anymore because everybody was going to make their own, the software stocks all got hit. And then we had to start differentiating among who were going to be the ones who were going to, first of all, use AI and be an AI pro winner, to those who simply were going to be able to survive in that, and those who still, it's an open question. So that's why it's been so difficult.
So I'm assuming your hot picks are probably the ones you think are going to survive through it. We'll get to the first one. That's Palo Alto Networks. Tell us why you like this company and the opportunity you see here.
Sure. Yeah. Each of these names are ones that we own and we've owned for a while. Palo Alto, I think the thing is to step back and recognize that they wanted to become a platform a couple of years ago, and they changed their strategy. Their stock got hit on that, and it's obviously recovered since then. But it's a long strategy to execute on, and they've done that both internally and through their acquisitions. Two of their notable acquisitions are Chronosphere and CyberArk. And in the most recent earnings report, both of those were ahead of schedule in their integration and were accounting for a significant amount of the incremental growth for the company. So that's a good thing. They've been doing a number of sort of an accelerated number of platformization deals. So that is starting to really come together. But in addition to that, of course, cybersecurity is a big issue anyway. And then with the advent of Mythos, being able to find flaws and exploit them, the urgency of having a good cybersecurity firm has been important. And I think that's what's really started to goose the stock lately.
What are the biggest headwinds for a company like this? I'm assuming, is it AI?
Well, we're thinking that AI is going to be not a headwind for them, that it's going to be something that they can take advantage of. But there's still a lot that's unknown in that regard, and how nimble companies are, and even the providers themselves. Every day is a new day. So there's still plenty of risk out there as things are moving so fast.
Okay, next up is Palantir. This is your next hot pick. Tell us why you like it.
So Palantir is interesting today, I think, in light of the SpaceX offer that came. So, Palantir is known for one thing in particular, which is being highly overvalued or very expensive stock, even given its high growth rate and all of the great things that it can do. So it fits into the category of a few stocks that are like that. But lately, the stock is off 38%. So you're starting to, from its high, so you're getting a chance here to pick it up, not at the ultimate lofty valuation. And some of that has to do, again, with fears of the LLMs. But Palantir is differentiated from what the LLMs can do. They make custom solutions that have to be robust in difficult environments. The defense and battlefield area is one in particular, but also in hospital settings, financial settings, et cetera. You got to be right. And they're doing that. And the growth rate in their most recent quarter is still very, very high. Their commercial grew 133%, government still up 84%. So the company is well positioned, and you're getting a chance to get it at a cheaper price.
Last up is MongoDB. Tell us, do you own this one and why you like this one?
Yep, we own this one too. And this is a company that's in the database area. They've been focused on enterprise and then moving into the cloud. And that part of the business has been growing very quickly. The product they have there, system is called Atlas, and that grew 29% in the most recent quarter. Now, they are not, they're not touting themselves as an AI company, but they are wanting to be a company that is used by AI. So, they're not going to be put out of business by AI, but they don't have the sizzle of being an AI company. And the most recent quarter was a beat and a raise, but their guidance was conservative. So I think that as they get their model together and they start integrating how they're useful to AI and those types of things, there's room for some upward surprises to their numbers.
Thomas Martin, Senior Portfolio Manager, Global Investments. Airline stocks higher after the U.S. and Iran announced that deal. The news could keep ticket prices from continuing to rise and could allow more travelers to travel by air. We spoke with Robert Kokonis, President Managing Director of AirTrav.
It's tough to catch a break in our business. You go back to 9/11, SARS, the global financial crisis, the more recent COVID epidemic, and now, this conflict. Oil, gas price, fuel prices are the most expensive input for airlines, going from maybe 24% on average of total OPEX last year to upwards of 32% this year. So I think just hoping that we start to see a retreat in jet fuel pricing.
What's the bigger risk for airlines? Is it higher fuel prices or having to avoid certain airspaces?
Well, certainly you have to avoid any airspace where there's conflict over that. And of course, as we know from the Middle East conflict, we've seen, plus the Ukraine conflict, we've seen flows of aircraft having to divert and add, in some cases, several hours onto a routing. So that makes route profitability very, very tough. I would say that, the carriers overall are doing a reasonable job of mitigating some of that pain. Lufthansa Group, for one, they're looking at an extra $2 billion this year, $2 billion, and they're hoping they can mitigate a good chunk of that through higher fare prices, other issues. Air Canada has said much the same thing. They're looking at acts between raising fares, raising other items, and also cost reductions and network optimization. So that's good. Some of the carriers, though, don't have as much pricing power. The carriers that don't have pricing power in the marketplace, it will be more difficult for them to mitigate some of these or a lot of this pain.
Okay, because I was going to ask, should travelers expect cheaper airfares if oil prices continue to go down, if we see a resolution to this conflict in the Middle East? Because recently we've seen prices for flights double, but it sounds like maybe we shouldn't expect cheaper airfares. Is that right?
Well, it depends on the route and it depends upon the market and how much competition there is there. I think we have to cycle back to, will jet fuel prices return to normal quickly? And the answer is basically for me is no. It's a structural issue. There's a lot of factors going on. I mean, with supply lags, you just can't get your crude oil production in the Gulf region and all the refining capacity, refining distribution back up to normal. Optimistically, we're seeing 3 months, but it's likely going to be a lot longer than that. All those crude oil reservoirs and stocks, the reserves were drawn down significantly during this conflict. It takes a while to build that back up again, and that also will have an impact on pricing. The third factor is I believe the market is still pricing in varying degrees of risk. If I look at the Brent ICE futures out to late this year, early next year, we're still seeing barrels financially in that $80 per barrel level. So it all points to continued discrepancy between physical pricing and financial pricing. So back to your original question about airfares, they're not going to, there'll be some movement down, but I think the carriers, from a risk standpoint, not to mention the fuel bills they get from their suppliers, I think it's going to be still several months until we start to see any kind of market relief on airfares.
Do you think it is likely that eventually, I take your point, it could take 3 months or longer, but eventually we could see prices return to what they were before this conflict started?
Yeah, I mean, for example, something we monitor the crack spread this year. That's the refinery margin between crude oil and jet fuel, spot jet. This year, the U.S. Energy Information Administration was forecasting $28 a barrel on average. Crack spread right now, it's around 85% higher right now, and that's what's being reflected into your higher ticket prices, whether that's base airfares or surcharges. At the end of the day, we all just pay one price. So I think, for the next several months, it's going to be tough to see a major retreat, but we're hopeful by end of first quarter next year that we're kind of getting back to where we were hoping to be early this year. Certainly all the global carriers, and I'm not trying to gloss this over, the International Air Transport Association, representing 85% of global scheduled air traffic, they just slashed their global profit forecast from $45 billion down to $23 billion. That's a huge hit. And we tend to look at things in terms of per passenger. I mean, this is not a profitable business to be in. It's tough. I mean, we're going from a hoped $9.10 average per passenger profit of IATA carriers down to about $4.50. That's like vaporware. So still challenges remain structurally on the oil and jet fuel refining side. And again, it's global pricing. Even though you've heard from the U.S. president talk about all their additional activity in the U.S. Gulf, the shale play, But the reality is all of our prices are set in global energy markets, and it's going to be still some time structurally until we can get back to where things were at the beginning of this year.
And the Middle East was one of the world's most important connecting regions as well, right? Like, how disruptive was the conflict to long-haul travel?
Yeah, like I mentioned again, like the Air Canadas, the Lufthansa, the bigger players that have some pricing power through the network optimization, dropping some unprofitable routes, increasing fares. They've been able to mitigate a good chunk of that pain. But those carriers that relied on what we call sixth freedom traffic. So think about Emirates in Dubai, Etihad in Abu Dhabi, Qatar Airways in Doha, Qatar. Those carriers relied really upon those big, massive hub traffic. They're going to take longer to rebound, and I mean they're still flying, and I see in Toronto, I see the Etihad and the Qatar and the Emirates aircraft, but it's going to take a while to get back to where they were. They've lost a big amount of money, and while they were out of action because of the conflict, the European carriers, in particular Lufthansa Group, Air France, KLM, IAG, which is British Airways, Iberia, and others, they moved in to backfill the lack of capacity via the Gulf nations. So they've actually picked up a bunch of business, and they don't want to give it back to the Gulf carriers anytime soon as well. So I think that alone, as we get into, especially later this year, might exert some price relief in the marketplace, because competitively speaking, all those Gulf carriers want to repatriate the business they had lost. So I think we're going to see on some routes into the Indian subcontinent, for example, there are going to be some reasonable reductions of pricing.
Robert Kokonis, President Managing Director, AirTrav. When we come back, a family moves from Ontario to Nova Scotia to save money. How it turned out after the break. An Ontario family was motivated to move to the East Coast. They thought things would be cheaper. Their housing, the cost of living would be down. But they got something more unexpected. CTV's Paul Hollingsworth reports.
Haley Bogdan moved to Nova Scotia from Ontario in 2022 with her husband and 2 children, expecting a cheaper cost of living. But the last 4 years have been a major disappointment.
We came here for a better life than we were getting in Ontario.
Expensive groceries, gas, and rising home heating costs are just a few of the items that have put Bogdan's family in a precarious financial situation.
I had no debt and a great credit score before I moved here, and now that I've moved here, I am in debt.
At one point, Bogdan was forced to buy groceries with her credit card.
I had to stop it because it's maxed out and I couldn't keep up with the payments.
When Bogdan first moved to Nova Scotia, her rent was $1,200 a month. Now it's more than twice that amount. A recent study shows Nova Scotia has become the most expensive province in Canada for apartment and condo rentals. A new snapshot from Stats Canada also shows Canadian household debt is outpacing incomes. Experts say affordability issues in this province are linked to the average Nova Scotia income, which is down compared to the rest of the country.
More than $10,000 at an individual level, right, after tax, and we're about $25,000 down versus the average family.
Retail analyst Bruce Winder is calling for all levels of government to prioritize investing in industry growth, which could lead to increased wages.
So they can increase productivity, output per person, and that'll increase profits and enable them to pay higher wages.
Until then, Bogdan hopes for a better and more affordable quality of life.
My husband and I have both been trying to find a second job
that doesn't include a crushing amount of debt. Paul Hollingsworth, CTV News, Dartmouth, Nova Scotia.
Let's take a final look at where we ended the day on the North American markets. The TSX actually hit a record close, 35,275, so up just short of 1%, or 337 points today. The S&P also in the green, up 1.7%, and then the Nasdaq moved up over 3% today, or 795 points to 26,683. Here's what moved us in Toronto. Materials. We have G Mining Ventures up $4.97, or 13.7%. Montage Gold up 10.5%, or $1.67. And then Nova Gold up 8%, or 84 cents. And here is where we were losing today. Oil is down here 4.4%. That's West Texas July's look ahead. And that's, of course, because there seems to be an agreement between the U.S. and Iran and hopes that the Strait of Hormuz will open by Friday, although some dispute that that will happen. And that could mean, if it does, that we have the supply of oil going back through the strait and perhaps that backup unclogging there. So we'll wait and see. Thanks for joining us today on The Close. We'll see you back here tomorrow.